The Nasdaq said it botched the Facebook IPO, admitting that technology problems affected the trading of shares. Yahoo struck a deal to sell up to half of its stake in Alibaba back to the Chinese company for $7.1 billion. I'm Lindsay Bell, and the morning call starts right now.
Good morning, I'm Scott Rudler, Chief Strategic Officer of T3Live.com.
And I'm Lindsay Bell with The Street, and together we bring you the morning call. The key takeaway out of the G8 meetings this weekend was that policies could change between countries, but they want Greece to stay in the Eurozone.
I think everyone would love Greece to stay in the Eurozone, but really underneath their breath, they know that it can't happen. The same way traders aren't as gullible as they used to be, I don't think many market participants are, and they know that Greece has to leave. And if they try and give them the money and they take more money and then they leave as well, then there's going to be even more fuel to add to this fire. So the real question is, what happens with Spain? Do their yields continue to rise? What goes on in Italy? Where's the contagion? Because right now I think most traders on the street know there's no way for Greece to stay. And the question is, once they finally leave, how quickly is their conversion to the drachma? And can we buy that news, or will there just be calamity thereafter? So right now a lot of traders are just back on their heels and they're trying to wait for the markets to help figure it out.
We also got some good news out of China overnight too, that they're willing to do what it takes to eliminate an economic pullback there and support a soft landing.
Again, the news out there is everyone wants to avert weaker economic times by creating measures to do so. The question is, can it work? Mm-hmm. Now they're talking about rate cuts more in China. The bottom line is growth is slowing, and growth is slowing around the world. So how do we handle it, and where do we go down to absorb and then continue on some type of path, and what measures can get us there? For us, that's over our head. For what I could do is I could show you levels in the S&P, levels in the market, where to look at to see if we could actually buy a dip at that arena or area.
Yeah, and the S&P is down 9% since its peak. So is there a viable bounce coming?
Well, on Friday, finally, the McClellan Oscillator that I talk about went to negative 80. If you recall the last week or two, everyone's like, is this a bottom? Is this a bottom? Like, we're only at negative 40, we're only at negative 45, we're only at negative 55. In this environment, you can't just buy here. We need to wait for extreme scenarios. So a few things happened on Friday. A, my oscillator got to minus 85. B, that head and shoulders top, if you go to the chart that I'll show you, met its measured move. So if we go to the SPX, you will see that this head and shoulders pattern that I've been pounding the table on with the left shoulder, the head, the right shoulder, that triggered a 1360, got us down to 1295. Remember I said 60 handles from the top to the neckline. There you go. So with the oscillator at minus 80-ish and with the measured move already in the bag, good spot to cover some shorts if you traded it to the short side. And then if you also sold correctly when we broke 1390 or broke 1360, good spot to put together a plan to perhaps buy the dip into this area. But one of the concerns is, can we hit the 200-day first? So no one really wants to be early, but I don't think you could be perfect either.
Yeah, and I think that you need to take a look at a lot of different sectors too. We'll get into that in the sector spotlight. We'll kick it off with the Qs. I mean, we saw the Facebook IPO on Friday. That really hurt that group. But it's down 10% since the start of the second quarter, but still up 9% year to date. So does that group have further to go?
I would think if you have to look at any group, this is a group that you'd probably want to buy first. Cleanest balance sheets. I know they have European exposure, but you could pick and choose your companies. If you look at the chart of the Qs, getting to spots that are interesting for macro guys. First things first, you had this move off the highs that failed. If again, you use technical analysis and you try and navigate, this was your sell opportunity. If you missed that, once we broke below this 64.45, that was your last exit. And if you exited there, look where we've come into. So at this particular point, again, the strategy I'm using is my little reversal strategy. I am writing down the low from Friday, which is right here at 60.76. If we go below, come back above, and create a day one phenomenon, perhaps you finally get a rally that could take you back to this 62.5, 63 area. But if we open up today, go negative, trade through this low, and don't see another rally, all of a sudden we're coming into this 200-day, which if you write down is around 59.40. And typically, first time you get to your 200-day, you bounce off because that's where institutions come to support the areas that they want to be involved in. But then if we don't bounce off there, which you've seen a lot of individual stocks get to the 200-day bounce and then fail, you go lower. So first time coming into this 200-day, I think has to be more of a buy than especially a short. And if you're trying to short down here, I think you're playing with fire a little bit.
Another group we've seen struggle is the financials. A lot of that's been around the JP Morgan news where more recently the whole group took a pretty big dip this last month. We're going to get more news from JP Morgan this week, I think. So what are the key levels to watch as the week develops?
Well, as we go sector to sector, you'll see which is acting better, which is acting weaker. And right now the XLF is already at the 200-day. So I guess the culprit is JP Morgan, as well as a lot of these banks hold a lot of the European paper. So people don't want to be there, and they also remember what happened back in 2007, etc. I look at the levels. You look at the levels here of the XLF. We talked about it. You know, again, just like the chart of the markets, this is when this upper level failed. This is when, if you were, you know, looking at it very close, this was your exit, and then this support level broke. Remember, we broke this like 1480, and then again we said, okay, look to your left, look at 1440. If 1440 doesn't hold, you're going to see the 200-day. So now here we are at the 200-day. So all in all, if you look at where we were coming into this year and the rally from October, we're still okay, but we've retraced quite a bit. So if you're a long-term fan of the market and you think you could buy some financials, this is a spot to trade against. For me as a trader, I'm going to watch 1372. Again, if we come below and come back above, and at least I have a calculated new point of reference, I'm going to try and buy some of these banks. But I don't think it's the first area you need to go to, just because they still have so many things to clear up. And can we get some type of oversold bounce with JP Morgan tomorrow? Yes, but only if you're willing to take the risk should you take it. But at this point, I think there's, again, more opportunity from the long side than the short side. I'm not looking to play these things except for micro scalp short, but I do think that there's areas that you could buy if you can have a longer term time horizon.
Retail, we just got through earnings with this group, and we're entering the summer months, which for them it has been really weak. So is this a group we should get cautious on?
Well, retail, as you've seen, a lot of the stronger sectors started to roll over. So tech is not at the 200-day, financials are. So financials right there are showing relative weakness to tech. You look here at retail, and you'll see that it also started to roll over, but look how far above the 200-day is. So if they start getting to everything, that's a lot of room there. So if the market does start to rebound, this would be a group that should rebound first. This was the last level of support we were talking about. It broke below it, and now it's coming into, this is the 100-day, and into a prior breakout. You know, but in any type of correction, everything always, let's see where we're coming into. Everything typically, you know, gets a downward move as well. So here, what would be nice to see is if this group could show some relative strength. I do think as of right now, this group is going to give us some leadership moving forward. So we'll go over some names later in the program.
The home builders, that has been a really strong group. I think they pulled back on Thursday and Friday a little bit. This week we're going to get existing home sales and new home sales. So what are the levels we should be watching as in the home builders as those numbers come out?
We talk about having high-level stops and low-level stops. So if you're uncommitted to a certain group that's acting strong, you still need to know where to get out, you know, if the momentum money leaves. And once momentum money leaves, if you're a momentum player, you got to leave. Now, off the charts last week, we talked about the XHB and the tight pattern that could be resolved to the downside when we saw the topping pattern in Lennar. You look here, if this was that level right around 21, you know, to me, I try not to figure out too many things and make it too complicated. All I saw is you had this a little uptrend that we've been following. You had a tight pattern that we couldn't continue. Market seemed like it wanted to be more corrective. So this was a nice area to sell. And then you had a little bit of follow through. So if you want to look to see where the next support is, I would say coming into this prior low here on the LX, what's this? This is 1924. So overall, you know, to avoid some of this pain, this was your out. Here is your support. This group is well above the 200-day. So for right now, as we measure the temperature of the sectors, it looks to me that tech and the home builders and retail is still stronger than obviously the financials that, you know, just they were the problem spot regardless.
Well, let's dig into the trenches with some tech names. We'll talk some high beta tech names. We'll kick it off with Apple. On Friday, we saw they were kind of hanging in there despite the NASDAQ and the Qs that were weak because of Facebook.
Yeah, so if you take a look at Apple, Apple is a group that I've been watching, or a stock that I've been watching every day. This stock has been unbelievable as far as giving us some signals on how to trade and cash flow, and just a cash flow vehicle. If you remember way back here when the market was rallying in its oversold nature, Apple couldn't find the friend, and that was your 620 sell setup. Okay, and then you had to move all the way down to 555. Then you had the earnings. Earnings came up, and we wanted to see, can there be pent-up strength here? Can it hold the earnings gap? And look what happened. It filled it, showing weakness. A lot different than the last time. Look at the last time it came out with earnings, just real quick to show you. Last time it came out with earnings, it was right here. Went sideways and took off. Didn't fill any portion of this earnings gap. So right here, that was your signal to say Apple's not ready yet. Then remember last week we were talking about shorting it below 555, 560. Well, here was your move. So now we're at the 100-day, coming into some bigger support. It tried to rally on a Thursday, Friday. So I'm looking more to be long than short this now. So I'm switching gears from short back to long. Use yesterday's low, 522 as a gauge. I don't even think it really went to 522 to be honest. I think it went to 528, so this is wrong. And it's up $4 today. So at this particular point, some people think maybe this market fails today. We're up 7, 8 handles. Maybe they sell it like every other day last week. Anytime we gapped up, they were able to sell it. So if Apple holds up and some of the key names hold up and they can't sell us down, maybe we get that gap and go. But in order to have more clues on what we're going to see, let's go to a commercial break first.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Some tech names. We're going to kick it off here with Google. They got hit hard Friday. They traded up. They bounced up in the last few sessions because of the Facebook IPO sympathy, but they got hit when that didn't do so well.
Well, people are thinking, okay, Facebook's going to open up at 38 and it could trade up to 48 and go from 100 billion of valuation to 150 billion or whatnot. Google, that's at a 200 billion market cap, that's cheap. So as soon as Facebook didn't act well, I think some people wanted to see what they could sell and they sold Google. To me, technically, I was looking to see if it could hold above that prior breakout, which was around 615. And once it didn't, now it's on wait and see mode again. So it's back to whether you're a macro investor because the trade just changed again. You look here at the chart, you will see that here are the two earnings reports. This was the last one. You could have bought the 200-day, went all the way back up. Another disappointing report, held the 200-day, and then remember this tight little pattern here? It was nice to trade it when it went above 617. Then you had a bit of a failure. Okay, we talk about short-term failures. Okay, and here you had basically it pushed through, came back below. So some people who were trading this for a short-term 3-day trade or so, that was your sell signal. And then, once the selling pressure came in and it couldn't hold this prior breakout, if you're uncommitted, that was your way out. Now the question is, will it hold, this 200-day again? I think you have to watch it very close because this market's tricky. So you have, this 580 right here, which is pretty big. And I do think that some traders are going to watch to see if we can get a bounce off this area. If we can bounce off this area and just say get back above again, the 615, some guys might be looking to short this area, which is right around 596 to 598. And if they do so, then you have this and we'll figure it out from there. But this 2-day action kicked out a lot of the momentum traders. A lot of guys thinking that it could act better, that it could come up and test this downtrend, continue to new highs, but at this particular point, doesn't look like it's going to happen right away.
LinkedIn was another one that got hit on Friday. It was down 6%, but it's a little bit better of a quality stock than Google is. Is this one maybe more viable here?
I wouldn't quite say it's more quality than Google. It's just different. It's been acting better. It's been public for like a year. I would say quality-wise, valuation-wise, it's better than Facebook. But once Facebook also started to fail, people said, let me just sell LinkedIn. It was just like a reflex knee jerk. But so, you don't need to be involved if the street's going to be selling it. So at this point, I still think LinkedIn has a higher future for it once its corrective process is over. But technically, if you're uncommitted, you have to look right here. Take a look at the chart, you will see that this was that mini uptrend that it's been following, during this course of this entire move. Then you had this earnings gap. Anytime it doesn't act well in earnings and gives you like an exhaustion gap, you just take a little notice. So right now this stands out as a topping tail. This was the exhaustion gaps means a move's somewhat exhausted. So you have to see how it handles it thereafter. So you're coming into a tight pattern. This day engulfed many of most of the action within here. And then on Friday, with the Facebook emotion, it broke this little uptrend. So the key is, what does it do to this gap right here? This was when Goldman Sachs upgraded it. So I would say uncommitted wise, I think a lot of guys might have gotten stopped out already on Friday. Now if you're looking to trade versus a level, trade versus this level here, the low is 96.60. But if it starts trading below this to fill the gap, you're going to see some pent-up momentum taken out of the chart, and then you have 90.40, and then another area down here at 84.25. So as a macro investor in LinkedIn, If you're willing to stay the course, I think it's okay, but I'm not a macro investor. I'm a trend trader, and yesterday, or Thursday or Friday, if you were in this for what you thought could be a move above 120, this technically takes that off the table for now. So now trade versus this level, and then if it starts getting into the gap, this 90-40 is pretty big.
VMware has been a cloud computing favorite, but it's down 15% since its May 2nd peak. So what are the levels we need to look at here?
This one I haven't been trading as close as I have been in the past. It was always a go-to stock the past 2 years. This year it's been a little choppy, but it's been acting well. So you want to figure out where everything's at. And with cloud computing, I think there's a huge conference coming up in the next few weeks. So you just take a quick look here. This is, also been very choppy. You look at this shooting star top on earnings. Okay, another signal. Look at it. If you just take a step back and look at some of these patterns, this is what happens here. They push through. They squeeze some shorts, and then they come back below the level, and that is distribution. In strong markets, this holds and closes on the highs and continues. In weak markets, it serves as a signal of distribution. So it came back then, retested it, failed, and now it's come into some bigger support. At this point, I think you missed some of your opportunities to sell, but here you are coming into the 200 days. So I would look to see if any old school leaders like this one, could find a reactionary low, and then it still looks broken. Maybe you get a rally back to this 104 or so, and then you have to see how it goes from there. But right now, most of these stocks that I'm looking at, constructive-wise, they need a lot of time to build new bases, new chart patterns. The question is, can you trade them in the hole with this setup and calculated? So that's what I look for here.
How about Amazon? They were able to hold their earnings gap, but on Thursday and Friday, they kind of gave back a little bit of that stability. So where do you think what happens with this one?
Well, I think traders that were just trying to be long it are going to take a step back, and guys that were getting beat up short they might smell a little blood here, because once those earning gaps give way, the shorts that are trapped no longer are short. So if you look here, Amazon started to trade back into this earnings gap, which to me, is a faulty signal. So you can't just be, this takes this move off the table. Remember, we were talking about as long as it holds 220, goes sideways. You can see pent up momentum here, but the market's too weak. Market wasn't strong enough to take out this 230 and go. So sellers came in and smelled a little blood, and here, this day engulfed this minor support area, so it gave you a sign to get out if that's what you were playing it for. And then I think some guys in my office actually made money short here as it traded below this area. So now what I would do is short term, look at yesterday's low, use that as an area. It's opening up. If it starts getting weaker and trades through Friday's low of 212, guys are going to probably continue to lean on it. And then here, you do get a gap fill, or here's another point of reference. A gap fill from earnings is all the way down here. But sometimes they like to look at other points of reference. So if it's going to be strong at all moving forward, I would say 209, 210 should hold, and you could see some type of pivot there. But if that doesn't hold, then again, it's your wait and see, and it's not one of the chosen ones anymore.
Priceline has been trending down since it lowered its guidance at the beginning of May. So what are you seeing in this stock?
Friday, I met my downside target. Ever since earnings, I'm like, you guys could stay short, lean short, fine. The complexion changed. If you're still alive and you were short, 6 months to a year ago, now's your time to smell some blood. And at this point, just like everything else, it's coming a lot. All right, this was the target that I had for Priceline into this gap area. So some of you guys hopefully covered on Friday and made a lot of money. This was an area to press a short. Okay, once it went below, we talked about this area around 680. From 680, you just got 50 points. Congratulations. Also here, once it broke this mini level here below 656, another entry. So at this point, even anything could bounce, and I think you're playing with fire. You have a big gap here that some leftover bulls might try and protect. At this point, use the low from, again, just like everything else, 630.13. Do they sell this open? If they can't, a move back to 656 or maybe even back up to here, could make sense, because look where it came from. So just know what could happen before continuation, and this way you don't get hurt by some of the whipsaws.
Let's talk about some quick hits. Let's kick it off with LVS. It's one you've had your eye on. It's been pretty weak though.
Yeah, ever since that reversal, it just hasn't had any strength. I've tried it a few times, trying to play a bounce. It's right back into that multi-month base it broke out from, which shows you have to be a market timer. You go here to LVS, round trip, Look at this chart from when it broke out here in a healthier market above this 50. You had a move up to as high as 62 before. Again, a nice reversal day. I've just showed you 3-4 really good stocks that had these reversal days that if you took notice and sold some, you saved yourself some pain. So this was your reversal day. We've talked about that. And then if once it broke below this support here around 56, it also went lower. So now, coming into this area, every day I donate a little bit of money as I try to see if I could play some type of bounce here, and there's been none. Tried a little bit on Friday, closing the lows. So here, watch the low. It's opening up probably a little bit with the market, 46.15. If you're still short, wow, congratulations, you have staying power, you're better than I am. If you're looking long, I do think there's some opportunity around here, but it's not going to bounce without the market, so make sure that we find the level in the market that's bounceable for more than 5 minutes to 30 minutes, and maybe it can be multiple days, and that's what traders are looking for to see if we can get this week.
How about Lululemon? This is one that, it's been a little bit weaker, but if we start to see this bounce in the market, can this one see a little improvement?
Yeah, it's one of the leaders. It's again in off the charts last week. We talked about how strong stocks could get weak, and a lot of guys made money shorting this because it broke a key area. I don't care if you love the gear, you love going there and shopping. Sometimes it's a better long than a short. So at this particular point, you look at LULU, and you'll see that it tried to break out, but again, in weak markets, breakouts are met with distribution. So it tried to break out and failed. That's a sign that people don't want momentum in this market. And then when it started to break below the 70, I think I was here with you, Lindsay, or it was maybe Jill, said below 70, you could get short, and you see at least a move down to the 100-day. So at this point, it's somewhat in no man's land. If the market wants to bounce, maybe it bounces back and retests its moving averages before going lower. But at this point, I guess if you sold it, once it came back or you sold it here, you could look to buy back. But I do think at some particular point, you get 59.92. If you don't want to be perfect and use a tier system, tier 1, tier 2, or if you want to buy it, just make sure you use the low here of 66.31 as your stop.
Okay, how about Caterpillar? They were strong in a weak tape on Friday.
Yeah, Friday I actually made some money on Caterpillar. I was looking for some type of trade, some type of reversal. I tweeted about it. I didn't stay with it just because I didn't stay with any stocks over the weekend, so I had a decision to make. Don't be short considering we're at 1,300 in the S&P, but do I want to be long into what could have been a 10-15 gap handle to the downside? So I was like, you know what, I'm just going to back off and I'll figure it out next week. And Caterpillar is one of the ones that has just been so battered and bruised. Why not try and bounce at this prior support? Look at this. This was, remember this? I can't believe we're back here. This was support all the way back from last November, December. Remember this? It feels like it was a decade ago. This was a nice breakout. And then since then, it's been so faulty. High, lower high, breakdown. So it's going to make a grasp to hold this low 87 area. It's below every moving average, so it's technically weak. I guess if you get any kind of bounce here, this 95 to 97, some guys are going to probably try and reshort it. So at this particular point, if you're going to be long, just be long versus, again, just like everything else, 87.60 for then what could be a bounce to about 95 to 97.
How about ZNGA? We got to touch on it. That got hit really hard, down 13%, all due to the Facebook IPO. So.
Well, again, I talk about a thesis, and so many sales traders had a thesis on this saying, oh, it's going to be 18 to 20 by the time Facebook comes out. Meanwhile, a lot of traders broke their rules, didn't use stops. And if you look at this chart, and if you take out the name ZNGA, it looked gross. Look at the size of this topping tail. Look at the size of this reversal. Right there, this says get out of whatever it is you're holding, especially if you can't get back above there, which you couldn't. So if you didn't do it there, here was your stop. If you didn't do it there, once it broke this level, that was your stop. And now it feels as if there's no juice left. Facebook is out. I'm not going to really trade this thing. I guess you can nickel and dime it, but at some particular point, maybe if it ever breaks above here after a few more quarters and some revenue growth and it proves itself. But for right now, so many people are trapped in this thing. I guess if you want to go against conventional wisdom, now that nobody wants to buy it and nobody wants to be involved and Facebook's already out, who knows, maybe it gets its bounce now. But,
yeah.
I don't trade that way against conventional wisdom. I like to use rules. So at this point, if you haven't used any of your sell signals, your last, I guess, stop could be if it starts to break below the 640 level, I would just say run for the hills. And if it starts to go sideways, if you go back to the chart, you'll see that, it could build this lower level pivot. And then at some point, if it does change complexion and it goes sideways enough and holds here, maybe there'll be some type of trade from here back up. But at this point, these networking stocks or anything affiliated with Facebook is going to be a little tarnished. So watch Facebook. If Facebook breaks 38 and goes to 32, I doubt this thing will have a bounce. If Facebook all of a sudden starts acting better, maybe there'll be a little bit of a bid.
Yeah, that's an ugly chart there.
Oh.
Salesforce.com, now Thursday night they reported a huge earnings beat. They raised guidance. They got an upgrade on Friday, so that stock was doing great on Friday. Is it going to be able to hold the bounce?
Well, you have to look at the earnings gap. Can it hold the earnings gap? Can there be any pent-up bullish momentum, which we haven't seen? So this will be something to watch. You know, stocks also taking a discount from the highs. So down here it made sense. It came in, filled this gap. On earnings, gapped up, tried to be strong. The only way to do this thing is the same way here. The low is 143. See if it goes sideways. See if it could hold this earnings gap. You know, and then at some particular point, with enough time, maybe it provides some leadership and gets above this 148 for some type of move. But for me, I'm going to avoid it. I think that it'd be something to watch, but if it starts to get into this gap and falls, it just shows you that people don't care right now, that you can even raise your guidance, have good earnings, because also Salesforce.com, very high PE. So if they're not supporting Apple with a forward-looking PE of 12 or 13, this one's in the trees. So who knows?
Yeah, that's a good point. So overall, going forward into this week, we want to see if it's oversold enough and that we're going to get a bounce, right?
Well, the question is the market needs a day one. And there's 3 different ways a day one takes place, and I wrote about it on the blog. All right, we were hoping one scenario, which is the best and the most trader-friendly, is that after Friday's gross close, that we opened up down 10, 15 handles, all of a sudden the market goes lower, the indices, and our stocks act well, and then all of a sudden you get a reversal, close strong, and then you could get a nice reversal trade as a trader, because most traders probably went home flat because they didn't want to have the risk. That would have been the most advantageous, but that was then, it didn't happen. We're up to 8, 9 handles now. So the question is, you know, do we go like last week where every time we were up 7 to 8 handles, we went negative and it was a gross day and nothing happened? Or do we get a gap and go? So the way you see that is you go open up 7, 8 handles, give it 30 to 60 minutes, see if stocks hold up, see if JP Morgan doesn't go negative like it's gone negative, see if Apple could be up 4 and go up 8. And if that's the case, maybe we go up from up 8 handles to up 15 handles, close strong, and then that could relieve some pressure. That's the worst scenario for traders, because if we go from up 8 handles to up 14 handles, you have to dissect 6 handles in the middle, and it's just hard. You know, one of the better scenarios that could take place is if we're up 8 handles, you know, we start fading a little bit, 11:30 we go negative, we trade through the low. If you look at the low on the spiders, I'll go to that one, the low of just say here of just 129.55, and then all of a sudden it trades below, cascades down, accelerates lower, gets anybody who's been trying to, you know, buy this dip out, and then maybe even gets close to the 200-day, and then reverses up, and we see a nice reversal tail on volume. Right there, that'll be a little signal that this move from here to here could be over. Then at least you have another point of reference. We can go sideways and then perhaps bounce back to this 134 area or so. Because remember that was a prior support, it turns into resistance. So this would probably be the, you know, a spot to a playground for an oversold bounce if we get it. If we don't, I would say, or it all depends on the dynamics of it. So the bottom line is up 8 handles. Is it a gap and go? Do we fail? Or does today just become another day in the life of this correction where we're up 8 handles, close up 2 handles, and we just are nowhere? So at this point, we want to see, can we get a sustainable bounce that you could stay with for more than 30 minutes to 3 hours? And also, can you actually buy in the hole, add to strength, and not ruin your trade? Because the past 2 weeks, every time you had to buy in the hole into support, things start working, you think that this might be it, and you add to it, you ruin your average cost, and you turn a good trade into a bad. So the frustration's been there. Let's see if that breaks.
So that's what you need to do to look forward for your day one gap. Check in at the end of the day for Scott's daily recap.